Hi, John Illig with Brokers Alliance. In this segment of Guaranteed Annuities, the Basics and Beyond, we're going to learn how the annual monthly average with an annual cap indexed interest strategy works so that you can be prepared to explain it to your client. Let's take a look. With the annual monthly average with an annual cap, the index value is measured every month and then at the end of the crediting period, 1 year in this case, averaged to determine the end index value. So we look at this again, that crediting period always begins either at the issue date or an anniversary date. We'll assume that our starting value in the index in this example is 1500. But what's going to happen through the year here, the 1 year crediting period, is that now we're going to take a look every month at what the point value or the closing point value is for the index, say the S&P 500, but it could be a different one, every single month. And then at the end of the year, we're going to average these things together. And that's going to give us our ending index value. So what's the math on this? Well, the math is simply this. We're going to take the average index value minus the starting value, and then that figure we're going to divide by the start value again, and that's going to give us our percentage gain in the index. So let's add some math to this. In this particular example we're looking at on the screen, the average index value during this 1 year period was 1621.25. How did I get that? Well, again, it's the average. If you take all of these values starting at 1500, 1550, 1560, etc., and you add those all up over the course of the year, it comes out to 19,455. We divide that by 12 to average it, right? It comes out to 1621.25. That's all that's happening here. But what's going on is that we're using that average index value as our ending value for the index calculation. Now, so that was 1621.25, the average index value. Now we simply subtract from it the starting value of the index. Again, that was 1500, and then we're going to divide it by that 1500 again, and that's going to give us an 8.08% percentage gain in the index in this particular example. And then we simply look at what that percent gain is, and we're going to compare it to whatever annual cap is in effect. So, if, as always with an annual cap, if the percentage gain is less than the cap, then the gain is going to be credited. If the gain is more than the cap, then the cap's going to be credited. So as you can see here, the annual monthly average, at least from a mathematical perspective, is very similar to just the straight annual point-to-point with cap. The only difference between the two is that ending index value is being replaced by the average index value. Other than that, the math is exactly the same. So again, how do we kind of simply explain this to our client or prospect when we're recommending a specific product and we're not going to use some fancy PowerPoint or something? Well, again, we should always have a yellow pad and a hand calculator with us. We might use something like this. Mr. and Mrs. Smith, let's talk about this monthly average indexed interest strategy. And what happens here is that we're going to actually measure that index value every month through the course of the year as it kind of goes up and down. Now, this product has an annual cap on it. That current cap is 6%, and that means that whatever this index does based on this measurement method, at the end of the year, the most we're going to be able to get interest crediting will be 6%. So the measurement begins at the start of the year. We look at what is the index value at that point, and let's just assume that that's 1500. Now, as the index goes up, down, sideways, whatever it's going to do over the course of each year, when we get to the end of that year, we're now going to take a look at what happened. And what we're going to do is we're going to see what was the average index value over the course of this previous year. And to make this simple, we're going to assume it's 16,125. Basically, we're going to look at the index value every single month, and we're going to divide it by 12 and average it. So to make this simple, let's say that's 1621.25 at the end of the year. Well, a little more math here. We take that average value and we subtract from it the starting value in the index, which again, as we can see here in our hypothetical, was 1500. Well, that's a change, a positive change, or a gain of 121.25 points in the index for this year. Well, we convert that to a percentage gain. In this case, it's 8.0% gain. But remember, we have an annual cap on this product. What was our annual cap? That's correct. It was 6%. That means that's the most we can get. So in this case, since the gain in the index was more than the cap, we would get that 6% interest credited. Now, if we did this and the series of numbers came out to say that that gain was less than our 6% cap, let's just say 5 to make it simple, then we would get the 5%. If we do this and the index gain is negative, let's say the index lost value over the year, well, of course, in an indexed in annuity, we can't ever lose any money based upon the index. So if we had a negative value at the end of the year, there would just simply be no positive interest crediting to your account that year, but certainly there wouldn't be any negative. That's how the monthly average annual strategy works. So our agents and brokers, again, with all of these things, if you want some printed instructions, we've got them. We can send you this PDF that, again, will kind of show you the highlights of how the math works that we just went through, and again, we'll show you every single step to hand calculate an example for your client sitting right there with them. And again, we strongly recommend you learn how to do this. It's not hard. With this particular strategy, there's a lot of steps to it, but still, it's just some simple math, but you really ought to be able to do this. It'll help you, it'll help your client. So that concludes this video on how the annual monthly average with annual cap crediting formula works. As you can see on your screen, we have other videos available on index interest, including what are stock market indexes and what are the key moving components of indexed interest formulas. We just watched the annual monthly average with annual cap. We also have a video on the annual point-to-point and the annual monthly cap or monthly additive, and also how does the annual performance trigger strategy work. Hope you found that video worthwhile and you understand this strategy better. If you have any questions about it, just give the annuity support team here at Brokers Alliance a call. We'd be happy to help you answer any questions, and as always, we look forward to working with you. Thank you.